Good morning everyone. At this time, I will be going to discuss about the deduction to taxation. But before we start, let me introduce myself first. So, I am Guelbert Cañedo from BSBE BE1K. So, what is taxation? Taxation is the inherent power of the state to impose and demand contribution upon persons, properties, or right for the purpose of generating revenues for public purposes. Or, ang taxation is ito yung ginagamit ng gobyerno to pay army and police and to build dams and roads and school buildings and many more. While the taxes are the enforced proportional contribution from person and property levied by the lawmaking body of the state by virtue of its sovereignty of for the support of the government and public needs. Taxes or buwis makuha na siya sa ato or kadtong sa mga businessmen or mga companies in the Philippines. So there are many kinds of taxes in the Philippines, but we group them into two basic types, namely national taxes and local taxes. So what is national taxes? National taxes or national taxation is based on the National Internal Revenue Code of 1997 or the Republic Act number 8424, otherwise known as the Tax Reform Act of 1997 as amendment. So let's proceed to the national taxes. First is the capital gain tax. Ang capital gain tax is a profit made on investment when that investment is a final result. So a capital gain are not income you earn as an employee from your own business, so but rather are due to the increase in the value of your investment. For example, if you purchase an investment worth 100k, so later na halin siya and worth of 600k, so your capital gain is worth of 500,000. So nga na ang capital gain tax. Next is the documentary stamp tax. Ang documentary stamp tax is a formal document. For example, kanang mga birth certificate, marriage certificate, so naanay mga buwis na or kanang mga loan agreements and paper evidencing the acceptance, assignment, sales or transfer on the obligation right of the property incident in that place. So next is the donor's tax. A donor's tax, or one of the example of the donor's tax, is a transfer of property less than the adequate or full consideration of such property. So it is a donor's tax because it is a tax on a donation or gift. Next is the state tax. Ang state tax is state tax is not a tax property. So it is a tax imposed on the privilege of the transmitting property upon death of the owner. So ang income tax is gikan siya, for example, makuha na siya sa kanang, for example, na isa ka person niya na mga properties o mga ari-arian niya gusto niya ipamana, and dito dapat na ipuakan sa government to process para ma-process na diha makuha ang income, diha makuha ang ilang state donors state tax. So next is the income tax. So income tax, there are many examples of income tax, but the But the one of the example is the mixed income earners, or mixed income earners is an individual earning compensation income from employment and income from business, practice of profession, and other source aside from employment. So, gikan na siya, mga earnings siya from itong sa mga employment or sa mga sa business. So, yan na mga income taxes. Next is the percentage tax. So, percentage tax is a business tax imposed on a person, entities, or transaction. For example, here in the Philippines, there are many types of percentage tax, but the most common is the 3% percentage tax. Ang pwede mo ka ng 3% percentage tax is mga person who are not VAT registered. So, next is the value added tax. So, value added tax is a form of sales tax na nanggaling po yan sa primarily sa ating mga sales transaction. It is also an indirect tax dahil pwede po natin ipasa sa atin po mga consumer or mga clients ng pagbabayad nito. So next is the excise tax. So there are two types of excise tax, the specific tax and the ad valorem tax. The specific tax refers to the excise imposed, which is based on weight or volume capacity or any other physical units of measurement, while the ad valorem tax refers to the excise tax, which is based on selling price or other specific value of goods or article. So that's all, and God bless.
Good day, everyone. Today I will discuss about local taxes. But before we'll proceed to the topic, I will introduce myself first. My name is Rodjen Dopende from BEBE 1K. Local taxes. The local government taxation in the Philippines are based on Republic Act 7160, or otherwise known as the Local Government Code of 1991 as amended. These taxes, fees, or charges are imposed by the local government units such as provinces, cities, municipalities, and barangays, who have been given the power to levy such taxes by the code. So, ang local government taxes sa Pilipinas ay nag-base siya sa Republic Act 7160, or otherwise tinatawag din siyang the Local Government Code of 1991. Ang mga taxes or fees, charges daw ay pinatupad or ang naghimo daw ani ay ang mga local government units, provinces or cities. Sila po naghimo og rules about sa local taxes. Next is tax on transfer of real property ownership. Tax is imposed on the sale, donation, barter, or on any other mode of transferring ownership or title of real property. So for example, you have owned a property, then, or kuha na nato example, motor, na kay motor nga own nimo. So ug imong ibaligya, by knowing the fact nga ug imong ibaligya, dapat ang papel is maka-transfer na or malahi na, ang mapangalan na is kadto mo palit na. Then og magpa-change ka og magpa-transfer ka sa name, dapat magbayad pug ka og tax. Tax on business or printing and publication. tax in the business of persons engaged in the printing and or publication of books, cards, posters, leaflets, handbills, certificates, receipts, pamphlets, and others of similar nature. So when we say tax on business of printing and publication, if you are making a book, before nimo i-publish, dapat mabayad pa ka og tax sa government. Then, or example po, naapog kay business nga printing shop. Before ka maghimo ana nga business, dapat magbayad ka sa imong buhis o sa imong tax. We have also franchise tax. Tax on business enjoying a franchise at rate not exceeding 50% of 1% of the gross annual receipt for the preceding calendar year based on incoming receipt or realized within its territorial jurisdiction. So, example kaning Jollibee. Before sila nag-franchise sa mag-franchise ka, like for example Jollibee, dapat magbayad ka og tax sa ug asa nimo nga place siya ibutang. Then before ka mo franchise ana nga branch, dapat makikooperate ka sa tag-iya. Tax on sand, gravel, and other quarry resources. Tax imposed on ordinary stones, sand, gravels, earth, and other quarry resources. So, when we say tax on sand, gravel, and other quarry resources, like for example, na may suba, then naay construction nga nagakuha sa inyo og kaning sand. So, before sila mo kuha, makig-coordinate sila sa barangay, then dapat pagbayad sila og tax. Then maura pud na siya og maghimo mo og quarry. Nga na magbayad gyapon mo og tax og asa nga place nimo siya ibutang. Annual fixed tax for every delivery truck or van of manufacturers or producers, wholesalers, of dealers or retailers in certain products. Tax on business. Taxes imposed by cities, municipalities on business before they will be issued a business license or permit to start operation based on the schedule of rates prescribed by the local government code. So, before ka mo make og business, before ka mo tukod, dapat mo adto pa ka sa city ug asa nimo siya itukod. Then before ka nila isyuhan or tagaan og business permit or business license, dapat mobayad ka sa imong tax buhis nga imong bayadan. Take note that the rates may vary among cities and municipalities. This is usually what business pay to get their business mayor's permit. So, di gid ka makakuha og business mayor's permit og di gid ka magabayad sa imong tax before ka mo tukod or maghimo sa imong business. Community tax. Tax levied by cities or municipalities to every inhabitant of the Philippines 18 years old or over who has been regularly employed on a wage or salary basis for at least 30 consecutive working days during any calendar year. So, in the Philippines, diri sa tua, umuedad na ka og 18 years old pataas, then regular na ka sa imong trabaho, then nagatrabaho na kag 30 days a month, so kinahanglan ka nga magbayad ka og community tax sa imuhang ang sa manager or sa tag-iyaan ang business for your benefits like PhilHealth, pag-ibig, SSS, ingana. So magbayad ka ato with an aggregate assessed value of 1,000 pesos or more. So mao to ang community tax. Taxes that may be levied by the barangays and stores or retailers with fixed business establishment with gross sales of receipts of the preceding calendar year of 50,000 pesos or less in the case of cities and 30,000 pesos. So, og himo ka og sari-sari store or store in your barangay, dapat magkuha ka og business permit sa municipal o sa inyong barangay para makatukod ka. Basta imuhang kita taga bulan is maabot og 30,000 to 50,000. Service fees or charges that may be collected by the barangays for service rendered in the connection with the regulation or the use of barangay on property. So, for example, diri sa mua, sa una is ang barangay ang maka-collect sa entrance sa our very own Viga Falls. Ang service fees or charges diri is kato entrance, then kadto didto ta magkuha o didto ang barangay council magkuha og ibayad sa mga paan kaning mga trabaho didto. Ana magkuha sila og tax didto sa mga service fees. For example pod sa kanang mga dagat, magakuha pod na sila og small percent lang para ibayad sa mga nagahinlo or permanent nga kuan diha bagabantay. Next, lastly is barangay clearance. Barangay clearance is a reasonable requirements collected by barangay in your barangay. So kung magkuha tag barangay clearance, dapat magbayad pud ta sa buhis or tax nga ilang pangayon. Di ta makakuha og barangay clearance basta di ta magbayad. So that's it. Thank you for listening. Bye.
Everyone, I am Junnel Ednilan, and for the continuation of our topic, let me discuss to you about the introduction of the sound tax system. So what is sound tax system? Sound tax system is one that is fair, transparent, and efficient. It should distribute the tax burden equitably, promote economic growth, and be easy to understand and comply with. So a sound tax system refers to a well-designed and fair taxation framework implemented by a government. It should be transparent, efficient, and equitable, ensuring that individuals and businesses contribute to public funds according to their ability to pay. So dapat sound tax system is dapat clear or fair, like palit mo paliton nga kanang isa ka butang, dapat everyone should contribute fairly based on what they can afford. It means clear rules, fair rates, and making sure everyone pays their share to fund public services and projects. So there are the three principles of a sound tax system, namely fiscal adequacy, administrative feasibility, and theoretical justice. So first is fiscal adequacy. Fiscal adequacy means having enough revenue to meet government's spending needs and provide essential public services, ensuring financial stability. So, fiscal adequacy refers to the ability of the government's revenue system, like taxes, fees, and other income sources, to generate sufficient funds to meet its expenditure needs. In other words, it ensures that the government has enough money to finance public services, infrastructure, education, healthcare, and other essential programs. Like for example, if a country's tax system generates enough revenue to fund education, healthcare, and infrastructure projects, allowing the government to provide equality services to its citizens without relying heavily on external borrowing. So second is administrative feasibility. Administrative feasibility refers to the ease of implementing and managing of tax system. It involves factors like simplicity of tax laws, ease of collections, and minimal compliance cost for both taxpayers and tax authorities. So, administrative feasibility in taxation refers to how practical and manageable it is to implement and enforce a tax policy. A tax system is administratively feasible if it can be easily understood, calculated, and collected without imposing excessive burdens on taxpayers or tax authorities. So like for example, a simple flat rate income tax system with a few deductions and straightforward rules is administratively feasible. It is easy for taxpayers to understand how much they owe, and tax authorities can efficiently collect and verify the taxes owed. On the other hand, a complex tax system with numerous intricate rules, exemptions, and loopholes might be administratively burdensome, leading to challenges in enforcement and compliance. And lastly is the theoretical justice. Theoretical justice in taxation refers to a fairness and equity for a tax system, ensuring that individuals and businesses contribute to the public funding based on their ability to pay, promoting social equality and economic balance. So, theoretical justice, it means, refers to the concept of fairness and equity is distributing the tax burden among citizens and businesses. It implies that individuals and entities should contribute to government revenue in proportion to their ability to pay, ensuring a just and equitable society. Like for example, a progressive income tax system is often considered theoretically just. In such a system, individuals with higher incomes pay a higher percentage of their incomes in taxes, while those with lower incomes pay a lower percentage. This approach takes into account the principle of ability to pay, aligning with the notion of theoretical justice in tax litigation. So that's all.